The most anticipated earnings releases for the week of March 4, 2024. Presented by earningswhispers. The number of companies reporting earnings this week is roughly cut in half, with only about 300 companies set to report, but that still leaves us with a full calendar for the week. We are going to start things off with C Limited, which has had some rather ugly numbers of late and expectations are rather low going into earnings. But despite the weak results, the stock hasn't gotten any lower and even appears to be heading higher now. All the signs that a bottom is in. After the close, we will get right back into the AI names with GitLabs. Last week was rather choppy for similar names. If there was a pattern, it was those that did the best the prior quarter disappointed this quarter and vice versa. That makes GitLabs vulnerable, and option traders are pricing in a bigger than usual move for the name. The focus on Tuesday will be CrowdStrike, which is a leader among the leaders and continues to see favorable industry trends and company checks. But the stock is still recovering from the weakness revealed by its peer Palo Alto Networks recently. Before that, we'll get results from Target. What we've heard from retailers is, once again, the consumer remains resilient, which is important as Target tries to recover margins from the past couple of years of issues. At the top of the list on Wednesday is Abercrombie & Fitch, which, unlike Target, has put together a string of strong results and is expected to have its strongest quarter in years. But by now you know it, right? Everyone keeps talking about capitulation in China, but what we've mainly seen so far this earnings season is those names that have been trending lower have continued lower, even if they have reported positive earnings. So, JD.com is expected to beat against bearish sentiment, which is statistically favorable. But if the stock is going to begin trending higher, you've got time. Broadcom tops the list on Thursday, which has reported okay results against high expectations, which isn't the opposite of JD.com, but it isn't statistically positive either. Of course, Broadcom is an AI story and it isn't as much about near-term results as it is about what's coming later. And for that, the stock is the opposite of JD.com, with the trend remaining higher until shown otherwise. Don't get me wrong though, Broadcom results are expected to start strengthening from here. Speaking of positive trends, have you seen Costco lately? Its stock just keeps moving higher and there is little expectation that it is going to end unless you are actively shorting the stock, because short sellers have been adding to their position on the way up and their losses continue to get stretched. They currently have their largest positions since 2018. They are nowhere near their record positions, but they've yet to ever be right for too long. America's Car Mart reports Friday morning. The used car business isn't exactly thriving, but they've been hanging in there longer than most have thought, and $60 is acting as support for now. Not bad news could get this stock to rally if $60 holds. Speaking of weak industry trends, Lazy Days also reports on Friday. The company changed its stock symbol last month, and that is throwing off the chart here, but the trend has been lower as RV sales have stalled. The symbol change has coincided with an entire rebranding for the company as it attempts to reverse its trends, and while the industry isn't exactly booming, it too continues to hold up better than most thought, and its peers have done better. It doesn't pay to pick bottoms, but the company isn't going down without a fight either, so maybe? The earnings calendar is going to be dominated by small-cap stocks this week, and some of them are quite small, which makes any option activity appear greater than it otherwise would, but it still seems significant for emergent biosolutions. The stock wasn't always a penny stock and, in fact, was pushing $140 for years ago. As is usual, no one shorted the stock then and didn't start shorting it heavily until the start of 2023. Since then, short interest has steadily increased as the stock has fallen $15 to relatively nothing. Now there is a management change and a spike in volume with a subsequent move higher in the stock. This is a short squeeze that likely isn't over yet. The stock market is closed for Good Friday at the end of March, and the quarter closes that weekend, so the only companies reporting earnings in the first week of April will be those with February quarter ends or earlier, and that is just a few so far. The rest of the calendar has most of the names on it, but as I said last week, Oracle should tell us this week that they are reporting next week.
Shh.